Hello, everyone. Welcome to uh, ATT UK's UAE VAT Diploma program, which is a prerequisite to becoming FTA approved tax agents in UAE. We are on chapter 7, which addresses deemed supplies. Let's have a look at it. Introduction. Deemed supplies are defined in the VAT law and regulation as anything considered as a supply and treated as a taxable supply. So usually it would be in kind. So, but we'll see. According to the instances stipulated in the VAT law, as such, deemed supplies are taxable supplies and output VAT is accounted on their value. So again, addressing deemed supplies, the VAT law in Article 11 considers a supply to be deemed supply and subject to an output tax charge if in the following cases: a supply of business assets made for no consideration. So, there was a supply, business assets were utilized or consumed, and no money was taken for that. A transfer of goods forming part of the business assets transferred from or to another implementing states. So basically, the taxpayer, taxable person, transferred his or her goods to another implementing states, the four countries. Remember, other than UAE, three countries: Saudi Arabia, Oman, and Bahrain. Why Qatar and Kuwait not considered as implementing states? Because they haven't implemented VAT law there. With the exception of a temporary transfer or a transfer that is part of another taxable supply of goods. So unless this transfer of business assets is only a temporary transfer or it is part of another transfer of taxable supplies of goods or services, this moving of assets from UAE to another implementing state, that will be considered as deemed supplies. So the entire value of those assets will be treated as the value of the supply, and output tax will be applied on it if applicable. The supply of goods or services that were bought for business purposes and on which input tax was recovered, but are subsequently used for non-business purposes. So yeah, like personal consumption by the owner, uh, it can be anything. In a restaurant, the owner and his family has had a very good, you know, lunch or dinner. So that's all company material inventory. So it will be seen as a deemed supply. That is just an example. Goods and services owned by the taxable person at the date of deregistration. So one VAT taxable person gets deregistered. So what was the value of the goods or services at the date of deregistration? That will be considered as a deemed supply made by that person. Now, accepted here, this accepted is the spelling is EXCEPTED, accepted, meaning by way of exception. Accepted supplies. The following instances would not be regarded as deemed supplies, which once no input tax has been recovered on the goods and services that are being supplied. So the company has not even recovered or claimed the input tax recovery. So then any supplies made uh, or on such goods or services, that will not be seen as deemed supplies. The supply is an exempt supply. So exempt supplies are not subject to an output VAT charge in any case. Uh, Similarly, on exempt supply, you can't even claim input VAT as well. That's so naturally there's no point in thinking of these as deemed supply. If the recovered input tax has been adjusted for the goods and services pursuant to the capital asset scheme. So there, it is a scheme where a relatively larger asset is uh, there is a special treatment that is provided, that is applied on that asset. So if the recovered input tax has been adjusted, so if the input tax is adjusted under the capital asset scheme, then uh, again this will not be considered as a deemed supply. Now, the value of 8,500 per recipient in any 12 months calculated going backwards from the end of the month in which the supply is made. So, if people have, if there were, gifts or free samples or something that were issued to various parties, but the value of 8,500 per recipient in any 12 month calculated going backward. So that uh, will not be, if it is within the 500 value, then it will not be considered as deemed supply and no output VAT will be triggered. Note that the reference to samples or commercial gifts has been removed from Article 5 of the regulation, however, remains in Article 12 of the VAT law. So VAT decree law, Article 12 is still there, but from executive regulations, Article 5, it has been removed. If the total output tax due for all the deemed supplies per person for a 12-month period is less than the following. An amount of 82,000 for each supplier within a 12-month period. So if the total output tax due for all the deemed supplies per person for a 12-month period is less than 2,000 dirhams for each supplier within a 12-month period, and any amount exceeding this threshold shall be considered payable tax. So from one supplier up to 2,000 dirhams worth of purchase, uh, that will escape the tax implication, but above and beyond that, there will be consideration of VAT. And this to 2,000 is within a duration of 12 months. Any amount exceeding this threshold shall be considered payable tax. By the way, this 2,000, if the total output tax due for the deemed supplies per person for a 12-month period is less than the following. So this 2,000 is the value of the output tax due for each supplier. An amount of 250,000 for each supplier that is a government entity or a charity, in case the recipient is a government entity or a charity, within a 12-month period, and any amount exceeding this threshold shall be considered payable tax. Any amount exceeding this threshold shall be considered payable tax. So, you know, uh, the whole concept, what the topic that we were reading was, following instances would not be regarded as deemed supplies. So, two things that we saw here was that uh, if the total output tax due for all the deemed supplies per person, all the deemed supplies per person for a 12-month period is less than the following. An amount of 2,000 for each supplier with a 12-month period, and any amount exceeding this threshold shall be considered payable tax. So that's the first scenario in which the an amount of 2,000 for each supplier. So from for one supplier up to 2,000 dirhams worth of tax will not trigger the deemed supply, but if it exceeds 2,000 dirham, uh, the output tax due, then above 2,000 dirham will be considered as payable tax. And the second scenario was when dealing with government entities, an amount of 80 to 50,000 for each supplier that is a government entity or a charity. If you are purchasing something from a charity listed in the charities list, or if it is a government entity and the output VAT due reached 250,000 dirhams, that's a lot. That will still not trigger the deemed supply, you know, provision. But if it exceeds 250,000 dirhams during a 12-month period, uh, for each, by the way, it is for each supplier, not altogether, for each supplier. So only then the above and beyond amount of tax will become payable. The 12-month period referred to is the 12-month period preceding the end of the month in which the person makes a supply in the above situation. The 12-month period referred to is the 12-month period preceding the end of the month in which the person makes supply in the above situation. So basically the same month in which you are making a supply. So first you have to consider the end of this current month, which is a future date. And then from that date, you have to look back for 12 months. Note a government entity is defined as ministries, government departments, agencies, etc., whether federal or local. So basically local government or federal government. So that's the concept of a government entity. And charities also we have addressed before as well. UAE Cabinet approves a list called charities list. So the charity or the NGO must be registered. They must be listed in that list in order to be considered a charity under UAE VAT law. How to account for VAT on deemed supplies? So a business that makes a deemed supply will have to account for output VAT on the supply. So there will be output tax to include in the VAT return. This is treated in the same manner as other output tax. The value of supply in the case of a deemed supply, when a taxable person purchases goods or services to make taxable supplies but does not use those goods or services for that purpose, will be equal to the total cost incurred by the taxable person to make this deemed supply of goods or services. So the value of supply in case of a deemed supply, where when a taxable person purchases goods or services to make taxable supplies but does not use those goods or services for that purposes, will be equal to the total cost incurred by the taxable person to make this deemed supply of goods or services. So the cost, the historical cost. However, where the supply is to a related party, the value of supply should be the market value if the following conditions are met. So if such a deemed supply was being made to a related party, then rules change. Then you have to consider the market value. If the following conditions are met, the value of the supplies is less than the market value. That's one. Value of the supply is less than the market value. And if the supply is a taxable supply and the recipient of the supply is not able to recover, recipient of the supply is not able to recover the VAT incurred in full. If the supply is a taxable supply and the recipient of the supply is not able to recover the VAT incurred in full. So what could be a situation where the recipient of the supply is not able to recover the VAT in full? Uh, Usually that happens in case the supply is either exempt or it is out of scope for maybe personal benefit. But anyways, below are examples of treatment of deemed suppliers according to Article 11 and 12 of the VAT law and the limitations set out in Article 5 of the regulations. Let's see the illustration. Maybe from here we can get a better understanding. Khalid LLC is a small company running desert safari tours in UAE. They purchased 10 sets of filmmaking equipment. It costs the business 60,000, which is exclusive VAT, per set of filmmaking equipment, for which they recover all of the input VAT. So 60,000 was the exclusive price, VAT exclusive price. So what about 5% of that will be probably 3,000. However, the Khalid LLC gives one of these sets of filmmaking equipment to a customer free of charge. Khalid LLC gives one of these sets of filmmaking equipment to a customer free of charge. Uh, Khalid LLC would need to account for the one set of filmmaking equipment as a deemed supply. Why? Because they gave it free of charge. Therefore, the output tax of 83,000 would need to be accounted for based on the date of supply rules for deemed supplies. So you can see, like, if the cost of if costs it costs the business 60,000 per set of filmmaking equipment, for which they recover all of the input VAT. So that's the cost to the company. So based on this, naturally 5% is 3,000. So, and if it was let out free of cost, then we have to recover the entire, we have to, report the entire 3,000 as the input tax. Sorry, 3,000 as the output tax. So on one side, the output tax full 3,000 will be reported, and then on the recovery, we will be claiming 3,000. So there's nil implication. Goods held on deregistration. Now, if you recall that scenario, a taxable person gets deregistered, the surviving the last day, assets, net assets are seen as as supplies that the person is making for the last time, and proper output VAT has to be accounted for. Goods held on deregistration. When a business ceases to exist, it is required to deregister for VAT. When a business deregisters for VAT, there is a deemed supply made at the date of deregistration on all the goods and services owned that were held on the date the business deregistered. The value of the supply will be equal to the total cost incurred by the taxable person to make this deemed supply. So please note that this is subject to the exclusions listed in Article 12 of the VAT law and Article 5 of the regulation. Therefore, no output tax would apply to the goods on hand in respect of which no input tax was ever recovered. Let's give a quick recap to what we just saw. First part was pretty clear. When a business ceases to exist, required to register for VAT. When a business deregisters for VAT, there is a deemed supply made on the date of deregistration for all goods and services owned that were held on the date the business deregistered. That was the first. What about the next point? The value of the supply will be equal to the total cost incurred by the taxable person to make this deemed supply. Simple. The rule is cost incurred, historical cost. Please note that this is subject to the exclusions listed in Article 12 of the VAT law and Article 5 of the regulation. So there are these two articles talk a little bit about some certain exclusions. Those exclusions will need to be made. Otherwise, other than that, the historical cost is the overriding rule. Whatever was the historical cost of the goods or services, that will be treated as the value of the supply. Therefore, no output tax would apply to the goods on hand in respect of which no input tax was ever recovered. So, FTA, Ministry of Finance, is fair to the taxpayer. If there are certain goods for which the company has never recovered any input tax or claimed input tax, then the company will not include or consider these goods for the purposes of output tax also. meaning these will not be seen as deemed supplies. That's about it. That was chapter 7, and that basically concludes the module A for this. So other, module B is entirely covered in next video sessions of the lectures. Please visit there. Thank you very much.